On Friday, I posted on Zenjamira's in Zenjamira's trading journal on Forex Factory, and it was, where is it? It's this post. It was here that I posted the image of this chart after I'd taken this short trade that I got out at break even, and I just wanted to do an update of what happened after this. You see, this is where I took this this image, which is in here somewhere. You see, subsequently, price continued and took out these highs, which is basically what I was waiting for. Price is in a range, waiting for a break. So basically I was waiting for a break, either bullish or bearish. But I'll just go through the three trades that I took here and what drew me into them, because this short trade, I mean, the thing that drew me in, you see, was we had this high and this high, and then I saw price consolidating here. It was failing to continue to make new highs, and then we got this break through bearish, and that drew me in short here. And my target, because I was going for a 2-to-1 risk to reward, 20 pip risk, 40 pip reward. I mean, I probably have adjusted. I mean, if this had gone like it did here, I would have probably have got out, you know, at this point. But anyway, price, you know, you can see price just didn't follow through bearish. It stopped and turned around, and I think I got out at break even. I didn't even let price, because I saw price wasn't following through, that I got out in here somewhere just at break even, around break even, because I could see, you know, once price, I wanted to see a fast continuation. After I saw this bearish bar here, a fast breakout, I wanted to see a fast continuation, and that didn't come. So I just got out at break even plus, and then I saw price push through and break through these highs. Now, of course, in hindsight, I can see, you know, this was bullish exhaustion. You know, it's classic bullish exhaustion. But you see, I still got drawn into a long trade in here. See, what I saw was this high and this high. You can see I had this drawn in here. And you see then a price breaks through, comes back, and it's being held in here. I know that by the time I took the trade, it was only like 4 or 5 candles or bars within this area. But I saw price holding, I saw this positive bullish reaction, and I went in long. And we can see, you know, at this point I should have just got out of this long trade, because there was no follow through. You see how this high, price couldn't even close the other side of it. And to be honest, I should have just jumped out here, but I didn't, and it ran and took out my stop. So that was a losing 1 hour long trade here. But then what I was seeing, you see, is price was failing to continue higher, and we get this rejection, and price starts closing lower. You can see we close lower, and then we break through and close lower again. price returns back up into this area, we get the rejection, and I get in short here. And now you see the difference between here going short and here going short. You know, apart from this bullish candle here, which I had to sit through, things were going, you know, bearish, and came down and hit my target for a 2R reward. So, you know, with the 3 trades that I took here, I was, you know, net 1 plus 1 R. And you see, this is something else that I watch, is the ATR, the average true range. I have it set to 1, and then it represents each bar. See, let's take this bar as an example. This bar, 25.3 pips. Well, 25 pips. So you can see, I can see here what the pip value for each bar is, and you see the difference. You see, I've got 20 pips, 15 pips and 10 pips marked off, and I want to see price staying within the 10 to 20 pip range. You know, mostly you get the odd bar that spikes above that, but that's okay. But the majority of them are between 20 pips and 10 pips. And you see what happens when we get red news. This is non-farm payroll. Our price spikes. Well, when I'm trading in here and price is within this 10 to 20 pip range, my stop is 20 pips and my target is 40 pips. So if I see price, you know, jumping up 6, you know, each pip, each bar here now is 60. What do we got here? See, we've got 50 pips now each bar. So if I'm trading, you know, if I take trades in here, which I haven't done, and I'm going with a 20 pip stop loss, that's nowhere near enough when price is this volatile. You see how the volatility jumped up from when New York opened, and you find this happens all the time on gold. Well, on most crosses actually. You know, the volume will pick up when New York jumps in as well. But you can see, I mean, this was 8 o'clock. See here, what time's this? See, this is around 1:30, 2 o'clock UK time, and the volume picks up, the size of the bars picks up. So if I was trading here, my stop loss and target would have to increase to cover the increase in volatility. So I'm just saying that because it's just something else that I watch, I keep a close eye on, is the ATR, and you know, whether we're in the 10 to 20 pip range for the size of the bars. But you can see, I mean, what I tend to do is just mark the the highs and the lows, because here, you know, we can see price continued to fall until this point, and then from here price started to climb out. You can see price failed to make a new low here, then we start breaking this high, we come down, we failed to get below this level, this little shelf here, price breaks up again, and then we get through the two levels. See, we get through this high point and this high point, and once we're here, I mean, you know, I'd definitely be, well, I'd probably be looking to take a long trade. Once I saw price failing to get below this low, I'd be looking to get long in here somewhere. But if you just put in, like I said, all I do is look at the highs and the lows, and then see how price reacts. As you see here again, you see, I mean, I wouldn't be, because what time is this? It's 12 o'clock. Yeah, so I probably would trade this. Again, we can see, you know, price is forming a shelf, consolidating in here. We get this push out, and we go through all these high points, makes the high, comes back in, and we fail to close lower than this point, the consolidation, and then we get this massive bullish bar out, jump in, go long. But I just wanted to show this, just to highlight, you know, what I did on Friday. Only I find it easier to make a video than I do to, you know, try and annotate my charts, because there's so much writing involved and it gets confusing. That hopefully this has made it a little bit clearer, you know, what I was looking at. And I would recommend anybody who wants to learn about scoping to go and check out Zenja Mira's trading journal, because it is a masterclass in scoping. If that's, you know, if that's your style of trading. Anyway, I'll leave this this video here, and I'll see you in the next one. Bye for now.